Good afternoon and welcome everyone to today's US market update and our Bulls versus Bears presentation. Great to see so many on today's webcast. My name is Kelly May, Associate Portfolio Manager, and here with me today are Fortrend CEO Joe Forster, along with Portfolio Managers Stephen Lyle, Chris Wallerman, and Andrew Corcoran. We welcome question and answers throughout the presentation. Please feel free to click on the question and answers tab at the bottom of your screen to ask a question. We will do our best to answer it in a timely manner and as best as we can. With that, I'll now turn the presentation over to Joe.
Thank you, Kelly. It's hard doing this through webcast because when you're here and I'm getting challenged on issues by people in the room who are much more experienced in your areas of expertise than I am, it adds to the conversation and to the investment club, as I sometimes think of it. So we look forward to getting you back into the office and getting better participation and hard questions. But today, Kelly will monitor the questions as they come through. Of course, we're seeing you soon. It doesn't seem so long ago that we had a presentation because only 3 weeks ago we did the annual earnings results. So we delayed that from typically doing it right at the end of the month to a week later so that we had more annual earnings results out. But now we're looking at and those are what we call the bottom-up analysis, where we look at individual companies and how they're pricing, volume, and accounting for costs and doing foreign exchange, et cetera, on a bottom-up analysis to today's analysis, which is top-down. Top-down is where we are macroeconomic views, where we look at government statistics and overviews, including exchange rates and top-down data. So today is the Bulls versus the Bears. The market, Kelly, do I have control here? Any questions? Right. So the market did fall 2% this 3-week period, while earnings estimates were increased by the relative value model went up by 0.4%, so we outperformed nicely this month, thanks largely to, as I say, your input, led by Viacom CBS, which is on a roll, and we did make an investment in the reflation trade in Exxon, and it surged on us right after we bought it. We got a dividend out of it, and so we took a profit in that, and we invested the proceeds into Amgen. The earnings estimates for 2021 for the current year are up by 0.3%, taking the price earnings, or the PE21, the price earnings ratio, down below 20. So 20 is reflective of a very low yield on the 10-year Treasury, but there was a surge in the 10-year Treasury this month as there was a recovery in the economy, and some people started to expect an increase in economic activity, which could result in inflation. So we saw some increases in commodity prices along with the increases in stocks. But there was some concerns that when you have an increase in the Treasury yield or you have an increase in fixed income yields, that makes growth stocks less attractive. So the FANGs were off this month, whereas the cyclical stocks are jumping. The rotation, the reflation rotation, where we're seeing a lot of strength after COVID in the stay-at-home stocks, such as the FANGs or Zoom or other companies that are helping people to work remotely, those stocks have been doing very well. And now the expectation is that the cyclical stocks that had not participated will now participate. So those are going to be things like cruise lines, entertainment, and hotels, etc., travel, airlines. We did sell Exxon during the month, and we're buying Amgen. we've had a good trade in Amgen. We bought it, it went up significantly, we sold it, and it came down after we sold it, so we're getting back into Amgen. So normally we have a pretty stable long-term buy and hold portfolio, but if we're going to get 20% in a month, we'll take the profit. And so that's what we did with Amgen, and it fell back down, so we're buying back into it.